Tesla shares moving to the upside here, up nearly 1.5% after the EV giant's shareholder meeting. At that meeting, Musk predicted that Tesla's Optimus robots could eventually lift the company's market cap to $25 trillion. But what are the other catalysts that Wall Street is watching? For a deeper dive into Tesla's growth story, we are joined by Itay Michaeli, U.S. auto parts and analyst here. Thank you so much, Itay, for joining us here. I want to start on what you are anticipating based on what we heard from Musk, specifically with regards to new product announcements. Sometimes it's tough to kind of suss out whether or not Musk's approach is necessarily going to prove to come to fruition. What did you make of the teasing out of certain new products to come at that meeting?
Absolutely. Good morning, and thank you for having me. Yeah, there is a lot of anticipation for the next round of new products from Tesla. Last quarter, they did allude to launching more affordable electric vehicles off some of the same platforms they have today and leveraging some of the manufacturing capacity they have today and launching these vehicles next year. There's really two things people are looking for in these vehicles. The first, of course, is the price point, just given that EVs do need to become more affordable and there's some opportunity for growth at lower price points. But the second thing that we're particularly looking for is really just the overall design and content of these vehicles, because the ultimate question, I think, for investors is going to be that will these vehicles generate the same type of excitement we've seen for other high volume vehicles in the past, such as, of course, the Model 3 and the Model Y? If the answer to that question is yes, we do see scope for sentiment to improve as the focus would then turn to these new products driving additional growth, versus which is really needed just given some of the demand headwinds that both electric vehicles, of course, are seeing around the world, and Tesla specifically is facing given some of the aging out of their current portfolio.
So Itay, two follow-up questions on that. One, what do you think prices should be at or need to be at to really spark that demand? We've been talking a lot about lower prices, but I guess more specifically, is there a range that you think is critical for Tesla to get to? And then two, when you talk about the Tesla story specifically and what these new products, what these new vehicles need to be equipped with in order to generate that excitement, what do you think needs to be incorporated in order to see that excitement play out in the market?
Yeah, so there's a lot of technologies, but whether it's in the interior of the vehicle or even others that could just create more of a change, right? When you think about large car companies as they grow, there does need to be different design languages, even different sub-brands within those vehicles to really appeal to a wider audience around the world. Because when you look at different regional tastes and regional consumer preferences, they too tend to vary not only by country, but even within regions in certain countries, including here in the US. So we want to see a lot of innovation, maybe different design languages, but really whatever it takes. Of course, Tesla's very good at innovation and very good at product to create a lot of incremental excitement. And price points are clearly important, but we've been on the view the price isn't Tesla's number one issue today. We would actually rank just the overall aging of the portfolio as being maybe a bigger issue for the company today than just price alone. So of course, we want to see 30, 40,000 and eventually even lower than that. Of course, Tesla's had aspirations to launch a $25,000 EV, of course. So we're mindful of the price points. And of course, the price points relative to the content you're getting. It's ultimately all about value for dollars. But we really are focused just overall on the content, on the design, on the innovation, to really undersee whether investors and consumers, of course, can get really excited about new vehicles that could be very high volume vehicles for the company. So it is a very significant focal point here over the next few months.
Itay, I wonder if you can talk a little bit about the path to autonomous vehicles. And you sort of mentioned the varying global appetite for a variety of things coming from Tesla. To what extent is the kind of bifurcation in interest in being in a full self-driving vehicle across countries globally sort of a potential headwind for Tesla moving forward?
Yeah, no, it really all depends on kind of the different opportunities within how you think about launching autonomous vehicles. So we are very bullish on the opportunity within autonomous vehicles overall, lower cost per mile, new business models, and the opportunity not only to increase revenue streams, but even to grab revenue streams that exist in the value chain today and bring it kind of back up to that automaker ecosystem. And I think autonomous vehicles tend to be often defined as sort of one business model, the so-called urban robo-taxi, but actually there are a lot of different business models in theory that a company could launch. And Tesla has a couple of very unique advantages in our view, one being that we do think that they could probably launch perhaps the cheapest and lowest cost robo-taxi platform out there, not only from a hardware cost perspective, but also from an operating cost and network cost perspective. And if we're right about that, that could actually lead to potential new opportunities of how to deploy autonomous vehicles. For example, you might not need to deploy in the most dense areas. You can actually maybe go to relatively easier areas, and then maybe even launch some services on your current ecosystem of consumer vehicles and robo-taxi vehicles, things like peer-to-peer vehicle lending, things like you order something at 9 o'clock at night and the vehicle travels to get it for you at 2 a.m. Why 2 a.m.? Because the safest autonomous vehicles are going to be the one driving without any person in the vehicle in relative times where few people are out on the road, and the vehicle can kind of bring you those items that you ordered in the morning. And so there's a lot of different ecosystem effects that we think that you can create to sell more vehicles, create new revenue streams, and ultimately try to supplement the consumer fleet with robo-taxi. Because the number one factor we think they have to get right when they kind of reveal the robo-taxi day is, of course, the cost and the vehicle itself, but ultimately is how are you going to deploy autonomous vehicles in a way that's first and foremost safe, but also can lead to additional revenue streams that maybe people aren't really thinking about today.
And Itay, before we let you go, if Tesla is in fact able to do all of that, what does the upside then look like for Tesla?
Yeah, we're still neutral rated on the stock, just given some near-term, fundamental headwinds we talked about. I think our estimates are still actually below consensus. But if you can turn the story into A, the new EVs we talked about, and B, if the company can craft a credible autonomous vehicle deployment plan that leverages their advantages, we think there is scope for sentiment to improve here in the next few months. It's going to be a very important few months for them to kind of try to reshape the narrative, given some of the near-term headwinds that they're facing.